Hello and welcome back to Catching Up on Capitol Hill, a series in which we discuss the latest in tax legislation and in tax policy. I'm your host, John Gimigliano. It's good to be back with you as we all continue to read, to contemplate, to consider the new law, OB3 or OBA or whatever you choose to call it. Today we come back to that legislation to explore it further, but hopefully in a way you haven't thought of yet. Specifically, we want to talk about what's not in the bill. Now, don't worry, we haven't nearly exhausted our inventory of things to say about what's in the bill. It's just that in my world, the question always quickly turns to what's next? When is the next bill? What will be in it? So let's take a look at what will at least be in the conversation when Congress finally gets back to legislation, whatever that might be. And stick around. I have a special message at the end of today's episode. Now, to help me look forward today, I'm joined by our friends Jennifer Gray and Tom Stout. The most fundamental question is, are we sure there's going to be a future bill? I mean, I guess so, because there's always another bill. But what are we talking about in terms of possible future legislation?
There's always going to be another bill because members want something to talk about, especially with elections coming up next year. And for individual members, it's always easy to imagine something with your favorite provisions in it. What's hard is trying to put all that together into something that can actually pass both houses. And that's where the problem comes in. Every time the three of us have this discussion, we always come back around to how in the world are they ever going to do this? But it's worth talking about. They will be talking about it, so it's worth talking about what might be in it and what might not be in it.
Yeah, what do you think, Jennifer? It seems like there's going to be interest in doing another bill before too terribly long, right?
Well, there'll be discussion about it. I think there'll be some effort. The question, of course, is always, can it make it across the finish line? Will they try to do another reconciliation bill on a Republican-only basis, or will they end up trying to do something bipartisan at some point before the end of the year? And those would be two very separate processes and very separate political calculations.
Well, that's a really key point, so thank you. When we say, will they do a bill, we should probably define they, and we can't right now because, as you said, there are really at least two options here, one of which is another Republican-only partisan reconciliation bill. That's one possibility. Or maybe they try and find bipartisan consensus to do a larger bill on a bipartisan basis by the end of the year. And the content of those bills probably looks pretty different, I imagine. Fair to say, Tom?
Very different. They haven't really done a bipartisan tax bill since the CARES Act back in 2020 in the middle of a health crisis. So it takes a lot to get one of those things done. But at the outset, one of the barriers to doing a bipartisan bill is the Democrats' first, second, and last ask is going to be to extend the expiring expanded Affordable Care Act premium tax credits, which is a pretty expensive item. It's about $30 or so billion a year. And the Republicans are divided on whether to do that. Probably fair to say some of them are adamantly opposed to doing it, which complicates things for the Republican side to try to put that in a bill. They're probably okay with some other stuff that could go in a bill, and we can talk about that some more. But that's the big barrier to a bipartisan bill at the outset. I guess another barrier is going to be if there is a revenue cost to it, are they going to offset it and what the offsets might be? We can talk about that a little bit too.
Yeah, so that was a good entree into this discussion of, well, what could be in a future bill? So let's just start off with tax cuts. And of course, what could be in a bill? It's an infinite number of things that theoretically could be in a bill. We're trying to talk about specifically things that we have relative confidence will be in the conversation based upon what they've talked about in the past or otherwise. So this one of the premium tax credit, this is extending the Biden ARPA era expansion of the premium credit is something that Democrats have definitely expressed an interest in. But also, and you pointed this out to me, Tom, some Republicans have as well. Some of the more blue state vulnerable Republicans have talked about doing it as well. But it's really pricey. So do you think the Democratic ask would be to do this on a temporary basis, a year or a couple of years at a time? Or are they asking to try and make this higher level of the premium tax credit permanent?
Well, of course, the ask will be to make it permanent. What they'll agree to is probably something less than that, I would think. Save that 30 billion or so a year. So I can imagine 1, 2, or 3 years. At least get them something through the election. That might be something they'd settle for, but who knows where that negotiation might end up. But it is their number one priority for a bipartisan bill, and it's expensive, which means you get into the question of do you offset the cost and how much does that cost? But this is the ARPA expansion, which raised the income level for the credits. The reason why some of the Republicans are behind it is because the estimate is somewhere between 5 and 7 million will lose ACA insurance without the premium credits. And that's enough to swing elections in close districts. So, and Republicans have people like that in their districts. So that's the politics of it.
Yeah, as you said, there are some of these Republicans who support it. However, this is why we're talking about it in a bipartisan bill. There probably aren't enough to do this in a Republican-only bill. You're not going to get, and well, I don't know. We're going to have to see, but it would be very hard to get a Republican-only bill to include this, just because there are many that don't care and are actually opposed to it as a holdover from COVID era policy. So that's an interesting one to watch out, and it's a do we do bipartisan or partisan bill kind of question as to whether or not that's in the conversation. Okay, that's one. Jennifer, how about you? What can you see as an additional tax cut that might make its way into a future tax bill?
Just recently, the president has mentioned additional capital gains relief for sales of homes, primary residences. And that could potentially, I think, have some bipartisan support, perhaps. There might be differing opinions among the Democratic caucus, but one could see some Democrats who may come from high cost states where there could be significant gains in homes having an interest in perhaps something like that that would provide additional relief.
Yeah, it's an interesting question. Yeah, so first of all, this question of capital gains generally. And you all may remember that during Trump 1.0, there was a lot of conversation about this, specifically indexing of capital gains. And there was talk about whether or not the Treasury and IRS had the authority on their own to issue guidance about indexing capital gains. And that may still be out there as an interest. But as you say, Jennifer, there's thing that's bubbled up most recently is providing relief on capital gains on sales of homes. And the political breakdown's a little bit interesting is because, of course, the blue states, the coasts have much higher home prices and probably greater risk of those individuals selling those homes of incurring significant capital gains on those sales. So this is one that could have some bipartisan appeal, but it's definitely something that the president has talked about. It will be interesting to see if they go there. Good one.
It definitely could have some bipartisan appeal. The current cap wasn't indexed for inflation.
Right.
And it's very old. So even if you just indexed it back to the date it was originally enacted, it would be twice what it is now. So that leaves a lot of policy argument on the Democratic side, might persuade people to do it.
Of course, the question, the distributional effects, who are the beneficiaries of that? It might skew wealthy. That's a problem, but that hasn't stopped them before, both parties. So that will be one. Okay, Tom, what else you got in the tax cut category that they could be looking at?
Well as the work opportunity tax credit, which is something that does have bipartisan support. I'm not sure how strong it is, but it's there. There's the Taiwan double tax legislation that they couldn't put in reconciliation because it doesn't have a revenue cost attached to it, but I think has broad bipartisan support. There's a problem with the gambling losses. You can't deduct gambling losses against gambling gains that a number of members want to fix, including some Democrats, especially those from Nevada, where that's a major issue. There's talk about another retirement incentives bill. I think it's 3.0 now. There's always another incentive bill you could do. And then the regular extenders, I don't even kept track of what they are. These are the little things like racehorse depreciation that have come up year after year that are small and sort of under the radar, but they're always vitally important to one member or two members. They could creep back into this.
Yeah, there's always more in the extenders category. And we were so focused on the TCJA items, kind of lost sight of what are the other dogs out there or racehorses as it may be. Jennifer, let me ask you a question. Before OB3 was enacted or during the run up to it, there was a lot of talk about the Tillis bill. And so just a reminder, there was the Portman bill. Senator Portman had introduced a whole series of international tax reforms. And then that bill kind of got passed off to Senator Tillis. Tillis introduced it, and boy, the business community loved the Tillis bill. I think it was Senate 1605 for anybody that wants to go look at it. I don't want to talk about specifically what's in it, but now Senator Tillis has announced his retirement. You worked in the Senate, Jennifer. Remind me how this works. Some of those things did get into the OB3, but not all of them. Is this the kind of thing where now that Tillis has announced his retirement, there's going to be a rush for other senators to go want to pick up what's left of the Tillis bill and say, now this is my bill? How does that work? Who gets to pick up a bill once a senator retires?
Well, at least partially is who makes the claim first. Obviously, he's still in the Senate for a while longer, so there may be a little while before they start picking at the bones of his legislative proposals. But there certainly, I think, will be other members of Senate Finance. That's a way for a senator to potentially carve out a space for themselves is to carve out some expertise in the international area, as Portman did, first with pensions and later with international. So that will be a process, really, who gets to the item first, who really has an interest in it and lays claim to the items by
Yeah.
introducing a bill or otherwise.
Yeah, that bill, I just went and perused it again this morning, and boy, there's so much in there. And like I said, some of it did get into OB3, but some of it didn't. Like, for example, the high tax exception to BEAT, that was one that was kind of in play there for a little while, but then ultimately did not happen. So that's one to go look at, as people are going to go back to that list and say, what did not become law? And let's pick that up again and try and get that into consideration. So we've come up with a list of things that will be in the discussion. I guess one last question is, Jennifer, let me go back to you again, because this is a budget reconciliation question. If Republicans are going to do a Republican-only bill, is there anything that you just heard that is important enough that somebody's going to say, this is a big enough thing that we've got to go do budget reconciliation? Because getting a budget reconciliation bill off the ground is not easy. There's a lot you have to do to get there.
Honestly, I don't think it's necessarily going to be one issue. The question is, will there be a bucket of issues that is enough? And don't forget, it's not just in the tax area. If they decide to go forward the reconciliation bill, there'll be interest in various spending areas. I know there are even some discussions coming from some folks in the White House about whether or not they should expand the use of reconciliation to maybe include some regular annual spending. So I think there are a lot of discussions about how reconciliation could be used. So I think tax could be a part of that. I don't know whether or not there are particular tax issues large enough to be the single driver of a bill at this point. I think it would be part of a number of items that would be part of the larger bill.
That's fair. Okay. All right, so let's flip over to the other side. So we talked about some of the tax cuts that are still out there, possibly, that they could want to go for. But what about on the tax increase side? So a couple questions here. So first of all, before people get mad at us, let's just only talk about things that have already been in the conversation. We're not going to go make up ideas for Congress to go raise taxes, but things that they've talked about that we know will be in the conversation. So first of all, do they need any tax increases? That's one question. And presumably they'll always need maybe a couple. What are some of the things that they talked about that we could see come back?
Yeah, I mean, that's always going to be the first question for a bipartisan bill is, are they going to pay for it? How are they going to pay for it? And the first thing they're going to look at is things that have been proposed before and haven't made it into a bill, because as we all know, revenue raising provisions never die. They just get put on the shelf for the next bill. The thing that looms over all this, and we could probably spend a whole podcast on it, is the Section 899 retaliatory measures bill, or some variation of it, that probably comes back only if circumstances demand it. And there's a lot of difference of opinion about what the effect is on the U.S. economy of doing something like that, which make it controversial. That sort of has a life of its own, I would think. In terms of just more routine revenue raising provisions, increasing the stock buyback tax from 1% to 4% is one that we sort of thought might be an OB3, because it's generally viewed from a political standpoint as a relatively easy one. The taxation of carried interests is one that's always pulled off the shelf, or always put back on the shelf, because it doesn't raise enough revenue, and at the end of the day, to be worth the political hassle, it seems. They increased the excise tax on colleges, but took out the one on private foundations. So that's something that could come back in.
Let's just talk about 899 for a second, come back to that. So it fell out, and it largely fell out because, at least as it was explained, they'd got an agreement from the G7 that they were going to give the U.S. what the U.S. wanted. And so we didn't need 899 anymore. Maybe that's all true. As long as the agreement that the G7 and others will ultimately agree to gets the U.S. what they want, I guess 899 can stay out. But it seems to me, if that agreement gets wobbly, I mean, they don't really give the U.S. what they want, that's when you would see 899 come back in. That's the first important observation. So we're not rooting for 899 to come back in, but we're saying it only came out of the bill because there was supposedly this agreement that to give the U.S. what they wanted on Pillar 2, so therefore we didn't need it. So that's one important thing to look at. And then you mentioned carried interest. Specifically on carried interest, I just want everybody to remember, it was the President Trump, that said carried interest should be in that bill. He also said higher taxes on the wealthy should be in this bill. So anytime we reopen a negotiation around a bill and there is the possibility of needing revenue, we would expect the president to come back saying, well, remember, I asked for this, why wasn't it in there? And the president, I think, was told, well, we don't have the votes for it. And so they got the bill without it. But Anytime that negotiation reopens, I guess that's your risk I think you're getting at, Tom, is that the
Mhm.
president says, let's come back to those. So whether there's money in that or not, those are good examples. Jennifer, let me ask you, what are some of the other ones that you would be keeping track of that could potentially come back and then that we know that they've discussed?
Well, a few things that were in various versions of the OB3 that came out at some point during the process. As Tom mentioned, there was a private foundations excise tax that was removed at some point during the process. The excise tax on the endowments of certain colleges and universities did stay in. However, it was extremely scaled back from the version that passed the House to what ended up passing at the end of the day. So I guess questions whether they would ever take another look at that or not. There at one point was a provision dealing with third-party litigation funding tax. It was quite a high excise tax, so question whether something like that would come back. The sports teams owners, you mentioned the president, that was one of the papers that he mentioned at one point were increasing taxes on billionaire sports teams owners. That was in the bill at one point, looking at amortization of sports teams. So that could potentially come back. So just lots of things that at various points have been discussed or were actually in the bill that came out. And as we all know, once a razor has raised its head in Washington, those tend to sit on the shelves and can sometimes raise their heads again.
I'll add another one that we haven't talked about that was in the House bill and then came out was Section 461L. That's the limit on the ability to use specified losses for non-corporates. I was kind of stunned that the Republican House picked up a Biden Green Book proposal that is nasty. The way it, prevents certain small businesses from not allowing them to use losses unless those losses are from the specific category of income that you have to match them together. I was surprised that the House pulled off that Biden specific proposal. When it got to the Senate, it fell out. Cooler heads prevailed. Like, wait, why are we doing that? I'm not here to be for or against any particular pay for. But I myself was surprised that that one came out of the Republican House. But as you say, Jennifer, it happened once. It could happen again. So that will be one that we would be watching to see if they want to come back to that. Tom, anything else that we haven't mentioned here? You talked about the stock buyback thing, right? It's a forever one. We can think it's a good idea or a bad idea. Whether you think it's good or bad is not really the point. The fact that Republicans
Mhm.
are talking about it means it was at least in the conversation. Anything else we forgot?
A couple of things that were in conversation but didn't really get that close to the bill that we might want to keep in mind. You mentioned taxation of the wealthy, the millionaires tax, so-called. There are 100 variations of that, but that's something that probably comes in a bigger bill later down the road. It's hard to see that coming in a year-end bill like this, but who knows? And the other thing was extending the state and local tax deduction to corporations, which amounts to a sort of a backdoor rate increase on corporations, which is why that didn't go anywhere this time, but might be something down the road. But again, probably too big for this kind of a year-end bill.
As we talked about when we were talking about tax cuts, the context here matters. Is this a bipartisan bill or is it a Republican only bill? Because if it's a bipartisan bill, you could still have 100 Republicans in the House vote against it and
Hmm.
still pass if you get 100 Democrats to vote for it. Keeping the old Hastert rule, as long as the majority votes for it, is that enough in the House? Like, sure, Speaker Johnson isn't super excited about losing 100 Republicans to vote against something, but they've had to do that before. And so if it were really important and if enough Democrats supported it, it just looks different, I guess is what I'm saying, is that different things could pass in a bipartisan bill if they really wanted to do it than if it was a Republican only bill. It's just the math is totally different. So those are things for folks to think about if a bill comes. So let me come back to maybe our last question, and you sort of alluded to this. When? All right, so Tom, you said year end. We're not limited to just year end, are we? But what are the windows of opportunity for us to do another tax bill? So maybe Jennifer, you start with your thoughts on what timing could be, and then Tom will finish with yours.
The big issue hanging all of this that we really haven't discussed is government funding. And so obviously we have government funding running out at the end of September. Lots of questions about how that process will go, whether or not that will work smoothly in a bipartisan basis or not. Remember that government funding generally does need 60 votes in the Senate, so it does need to have bipartisan support. So one would assume that most of the time that is spent coming back from the August recess will be dealt with that. They have a lot of work to do in order to meet that 9:30 deadline and lots of questions about how that will go, whether, again, that will go smoothly or not, whether we'll see threats of a government shutdown. So one would assume that that would need to move forward before they move on to dealing with whether that be a reconciliation bill or a bipartisan bill. I think a reconciliation bill could probably start a bit sooner. My guess is we are looking at a bipartisan bill that would more than likely be something that would be discussed probably in December as part of a year-end wrap up.
What do you say, Tom?
Yeah, I was going to say the same thing. Obviously, the government funding is going to be a bit of a distraction going into the fall. So whether they're going to be able to turn their attention to some sort of bipartisan or reconciliation bills is an issue. The big barriers to bipartisan bill is, as we discussed, the Affordable Care Act premium subsidies, whether there's sufficient Republican support to get a bipartisan bill done with that in it. And I think on the other side, with the reconciliation bill, as Jennifer mentioned before, one of the big problems is going to be on the spending side. If it's a reconciliation bill, there's going to be a division mainly between House and Senate Republicans on a partisan bill on whether to cut spending again and go deeper into the Medicaid and other cuts that some of the House Republicans wanted to do, but some of the Senate Republicans didn't. And the barrier they face there is the narrow majorities that the Republicans have in the House and Senate.
Yeah, that's a question of what's in it and can they do it. And it's a fair one, but purely as a matter of when they would do it. Purely procedurally, we're talking about in the FY 2026 year that we would be doing that reconciliation bill in. And I know theoretically it could start before FY 26, but as you both have pointed out, let's be realistic. They're going to do government funding in September. So it's going to be October before they can do anything. So am I correct here? You're saying there's a window of opportunity in December when they get to the year end, which could be attached to whatever they have to do on longer term government funding. And then budget reconciliation, if it's a Republican only bill, that could go all the way through FY 26, right? That takes you all the way up to 930, which, boy, that's bumping right up against the midterms, right?
Right.
Yeah.
But it clearly could. I mean, they could do that if they wanted to. They probably won't want to.
They got to do something in 2026, don't they? Besides campaign.
Yeah, early, not up to the election, but yeah, the first 2 or 3 months, they could probably try to do something.
Yeah, so it sounds like circle year end as one opportunity and maybe more of a bipartisan bill, but the Republican only reconciliation bill, it's probably the first half of 2026 is an opportunity before they're in all campaign mode all the time. And they're probably not going to do a big piece of legislation too close to the election. Okay. All right. Well, Jennifer, Tom, you gave us something to think about, the things to look forward to. We're going to go back to, what was in OB3 that we still want to talk about, but we get the question so much, what's in the next bill? This is our first attempt to ask ourselves what could possibly be in that next bill. So thank you. That was very helpful. In closing, I just wanted to make one observation about OB3, and then I want to do something we don't really do much here, and that's make a sort of special announcement. So first, the observation. Loyal listeners will recall we did an episode early on in the Tax Cliff series asking the question of whether the bill could be considered tax reform. That episode received several comments, maybe from you, saying that the whole premise was kind of, dumb, that an extenders bill by definition, it just couldn't be reform. Now, before I do a I told you so victory lap on that question, I have a confession. I agreed with those comments and those people who made the comments. But we did the episode anyway, because I thought, it's a valid question. And many people were already using the term reform as shorthand for the bill that Congress is working on. So now that the bill is done, yeah, I actually do think it's a version of reform. Now, caveat, my definition of reform doesn't mean awesome, okay? There could be all sorts of reforms that you either like or don't personally like. To me, reform just means just that it has reformed, formed the tax code. And OB3 has definitely done that. Consider the international provisions. They set a new direction on international tax policy that objectively clears the bar on the term tax reform. But more importantly, by introducing permanence to the tax code, OB3 is also reform. As you know, even the biggest supporters of the TCJA acknowledge that the temporary nature of many of its provisions were a shortcoming. Temporary provisions rarely achieve their intended behavioral effect. Take FDII, for example. With FDII, or I should say it's now known as FDII, with those benefits now permanent, we're about to find out how compelling that incentive either is or is not. Allowing taxpayers to make those decisions based on a permanent regime, that could be very different than what they might have done in a temporary world. Okay, now my announcement. I just wanted to note that this summer, June actually, marked the 5th year anniversary of catching up on Capitol Hill. I'm just as surprised as all of you that this little enterprise born of necessity during the pandemic not only continues, but it does so with a growing listener base. So I have to thank so many people for our 5-year run. Of course, there's the core brain power of the show. Jen Acuna, Tom Stout, Jennifer Gray, Dan Winnick, Carol Coolish, we miss you, Carol, and the many special guests we've had over the years. And a special thanks to Liz Moisey and the whole Studio K team for producing us and making us sound good all those years. And lastly, of course, thank you to the listeners. Thank you for listening, for providing feedback, for rating us on podcast platforms, and for occasionally stopping me at events to say you're a listener. It definitely is rewarding to me. So to all of you, here's to another 5 years. With that, thanks again for tuning in to Catching Up on Capitol Hill, and I hope to see you soon.